you can change it very quickly. Can you add the B in my name, please?
Sure.
And the CFP, since this is financial planning. Thank you.
Good evening, everyone. Thanks for jumping on tonight. We're going to give a few more minutes for folks to jump on. My name is Mark. I'm from the Cash Campaign of Maryland. We have Christina and Dr. Nicole here. Hang tight for a second. If you'll notice your video might be off, go ahead and keep yourself on mute and keep your video off just for solidarity while we're doing the presentation. Once again, I want to thank everyone who joined the webinar tonight. We're going to wait a few more minutes for folks to jump onto the webinar and to join us via Facebook Live. Once again, I want to thank everyone who joined the webinar. Good evening, everyone. My name is Mark. I'm from the Cash Campaign of Maryland. I want to introduce Christina and Dr. Nicole Simpson. We're going to give it about one more minute and then start. I want to thank you for your time. Today, we're going to talk about the COVID-19 financial recovery plan with Dr. Nicole Simpson. And as we're waiting for folks to join in, go ahead and introduce yourself and how you heard about this webinar in the chat box. I want to remind everybody that we will be fielding questions during the webinar and after the webinar, so stick around. Feel free to chat in the chat box. And if you're joining us through Facebook, feel free to send a message through Facebook. We are monitoring the chat box on Facebook Live. And feel free to also share the link. You should see a link for the Facebook event that you can share on social media through the Zoom chat box right now. Thanks, Ms. Caldwell. All right, so as folks jump onto the webinar, I'm going to go ahead and get us started. Let me start by introducing myself and our two guests. We have Christina Figueroa from the Cash Campaign of Maryland, and we also have Dr. Nicole Simpson, who is a certified financial planner. Today, we're going to look through a COVID-19 financial recovery plan. I'm going to start by introducing myself and our organization. So today, if you joined in, you should be getting information about financial coaching and financial planning, our program and our services that we offer through the Cash Campaign of Maryland. A little bit of information about who we are. The Cash Campaign of Maryland promotes economic advancement for individuals and families across Baltimore and across Maryland. We accomplish its mission through an operating portfolio of direct service programs. By building organizational and field capacity. We've also led policy and advocacy initiatives to strengthen family economic stability. As I'm introducing an overview of our programs and services, if you jumped in late, start by giving your name and maybe with an icebreaker, tell us what your favorite free or low cost activity was during the stay-at-home order. What did you do to stay entertained during the pandemic? So go ahead and chat your name and just your favorite low-cost activity during the pandemic. So while you guys are chatting, I'm going to give you guys a little overview about the organization itself and our programs. We are well known for our free tax preparation. So anyone who earns $56,000 or less is eligible for free tax preparation through the Cash Campaign of Maryland. Right now, we're doing remote tax preparation, which means you can set up an appointment to drop off your tax documents. And up until mid-May, you're able to get your taxes done for free at a VITA IRS governed tax location. It's the equivalent of getting your taxes done at a professionally organized tax site. You can do a quality review to go over your finished tax return. And then from there, we will file either electronically or you have the option of mailing in your return. The Cash Campaign of Maryland is also known for financial education workshops, just as you're attending now. You can go to www.marylandcashacademy.org to find a list of financial education workshops from topics as broad as financial planning and financial coaching to topics as specific as setting up a legacy plan or estate plan. There are topics on the pandemic. There are topics on public benefits or earned benefits, and that transitions to the next program that we offer. As an organization, we offer benefit screenings, so you can see what public benefits you qualify for to help reduce expenses. And today we're going to be talking about our financial coaching and financial program, which is essentially one-on-one mentoring with a financial coach. And in addition to the program services that I just listed, we also have Money Power Day, which is an annual financial fitness fair. If you have any questions, you can visit our website, www.cashmd.org, for more information. And if you just joined, what we're doing in the chat box is listing our name and our favorite low cost activity that we did during the pandemic. So before I go into the details of what financial coaching is, I'm gonna toss the mic to Dr. Nicole Simpson for her to introduce herself. She'll be presenting a topic about COVID-19 and a financial recovery plan. So without further ado, I'll go ahead and introduce Dr. Nicole. Dr. Nicole, thanks for joining us today. Tell us a little bit about yourself and what you're gonna be presenting.
Well, thank you, Mark, for having me. It's good to be with Cash Campaign of Maryland. For those of you that have joined us on this beautiful Tuesday afternoon, my name is Dr. Nicole B. Simpson. I have been a financial advisor and certified financial planner in the securities industry for 30 years and counting. I am Series 76365 licensed, as well as my life and health insurance. I am so excited that you joined us tonight so that we can talk about how to recover after the impact of COVID-19. I believe that you'll find the information to be invaluable. So if you don't have a pen and a piece of paper, you might want to grab one now. And we hope to give you some valuable tools that will allow you to really focus on your own financial freedom. Thank you, Mark, for having me. Can I just get started? Should I just go right? Okay, awesome. Thank you. I thought I was just doing the introduction. So thank you so much for coming. How do we recover from the COVID-19, the experience that COVID-19 has had on our lives? Tonight, we want to be equipped with a recovery plan that will be beneficial for each and every one of you. But the very first thing that you should do literally is breathe. This has been the most challenging 13 months of our lives as Americans and throughout the entire world. So it's not just impacting America, it has impacted the world, and all of us were forced to sit down and make adjustments in March of 2020. And so the fact that you are here now, you ought to, just be, just excited at the fact that you're still standing with all of the turmoil and the calamity and the death that we've endured. We're here and capable of thinking about our future and our tomorrow. And in your being able to breathe and just exhaling for a moment, the next thing that you want to do is you really want to assess the true impact that COVID-19 had on your life, your family dynamics. There are different scenarios in which COVID-19 has served to be detrimental, but in some areas with people that may have been underemployed with the opportunity to collect unemployment, it may have fared a little bit better for them. Some of us with the impact of extended death and extended loss in our families, we find ourselves in a position where our finances may have been impacted as well. Unfortunately, if one has lost a primary wage earner, that does lead to a different set of circumstances in your family dynamics. So what one must do is really assess, how was my family directly affected by COVID-19? Was my income increased? Did it decrease? Or did it stay the same? And once you can make that determination, then we can begin to build from there. As much as it is emotional, finances are a second conversation to be had thereafter. For those individuals that saw that their income rose slightly because you were able to get not only unemployment, but unemployment plus the surplus that transpired, you may have found yourself stocking away a little bit of resources all throughout the year. I want to commend you for being able to do that. There have been others that found the struggle of unemployment, with all of the services, with the overwhelming that your checks were coming very incrementally. And so what that has done is it has caused you to get incremental lump sums of money, but nothing consistently. You're still here, and we can build from this moment. For still other individuals that may have suffered a loss from a primary wage earner, not only did you have to deal with your day-to-day, but now you've had to deal with or contend with the fact that you are now burying someone and you have all of the estate planning issues to address. We'll touch on that toward the very end. The medical challenges and the financial challenges are real. So in your assessing, you want to look at where you're standing. You want to see, where am I faring? What expenses are still here? Where was I able to maintain some level of stability in paying my bills and my expenses? Do I have to have conversations with bill collectors and individuals that I may be financially obligated to? Where am I standing realistically? Was I put on leave or, let go of employment, but now I'm working again. And because I'm working again, I'm able to start all over with my savings, my investing, and just sort of rebuilding my financial picture. And so one of the things that I tell individuals is, how do you eat an entire elephant? You eat it one bite at a time. And so looking at your primary income, what it is that you're bringing to the table, this is a perfect chance to revisit your budget. And I'm certain that you've looked at your budget overall during COVID-19 and saw that some of the expenses that you had were eliminated because we were at home. So we didn't find ourselves going out as often as we would. We found that perhaps our food expenditures increased because food costs increased, but our transportation expenditures may have been reduced just a little bit because transportation not going out, you didn't have to put gas in the car. So you really want to assess what has changed and where do I stand now? And that requires looking at a budget. You may have already found that you've had to cut certain things out, in order to maintain a standard of living. You may found that you have had to take advantage of, the rent memorandums that have been set aside. And now that the end of June is quickly approaching, how do I begin to recover from that? Look at where you're standing, and a budget will help you to realistically assess that situation. Once you can identify the difference between your income this year, where it would have been versus last year in March of 2020, the next thing that you want to do is you want to evaluate, who can I negotiate with? Bill collectors are not looking to pressure you. They're not looking to cause more anxiety. They understand what it is that you've endured. So it is critical that you're in constant communication with them so that you can not only make every attempt to perhaps preserve your credit, rebuild your credit, but also to ensure that you're not doing more financial damage than absolutely necessary. And so in having conversations with bill collectors and creditors, you'll find that they're amenable and willing to work with you. Particularly, there may be some individuals that are looking at their gas and electric expenses or lighting expenses, some things that you may have been on with a consistent payment or the bill comes in. We've noticed that if you're home more often, your gas and electric bill has increased. Have a conversation so that, as we're turning with the turn of the new weather, things are getting warmer outside, you don't want to come home one day and realize this was a bill that I didn't pay up until this period of time, and you don't want to have a candlelight dinner when that can be avoided. So we want to make sure that we do that and be in constant communication. What I can stress to you is that these entities understand what it is that we've been going through. And so they're willing to work with you and set a new threshold or barometer and then have you incrementally pay other resources. I also will add that many entities are also offering an opportunity to get some sort of subsidy assistance. So be sure to look out for that. Even Cash Campaign might be able to gear you in the right direction when it comes to those types of expenditures. Look at your food costs as well. We find that, in the last year, that is probably the expense that has increased the most. And people are home every day. And so you found yourself just having to eat food more. Can you go back to now that you're back on a regular schedule would work, can you go back to making an adjustment to your food bill? Or did you find in buying in bulk and buying at home, that you save money from not spending money outside and at fast food restaurants or other entities that you had been accustomed to beforehand? I'm going to tell you to look at that very closely, because that's the first place where you can really rebuild. In as much as food costs has increased over time, we also find that those families that will, do the traditional shopping at home and cook meals from home, you have some expendable cash that's there that we oftentimes don't see. It's just a matter of eliminating one trip to McDonald's for a family of four. You're spending $25, $30 in that one venture out on a Friday evening. That's $25 to $30 that you're now able to set aside for your rebuilding strategy. But now that you're back to work, here's the awesome opportunity. You can start all over again. Just keep in mind that you've survived this long. You've endured the worst, that it is indeed behind you. So what you want to be able to do is look on, how do I, moving forward, begin to rebuild again? There are some individuals that did not miss a beat at work. They found themselves able to maintain their employment, but their expenses were higher because perhaps someone in the household may have lost a job and you weren't able to pitch in as much as you've been able to. And so some may have taken perhaps a loan out on their retirement plan beforehand, but now that people are going back to work or even going back into the offices again, you want to look at where you're standing on your job. What benefits do you have on your job that can help you to reestablish your comprehensive financial plan to put you back on the road to recovery? I find that this is invaluable for individuals because oftentimes we don't leverage what we have with our employers. Your employers may have a position, or they may have an opportunity for you to save in a 401k, 403b, or some sort of retirement vehicle. And you may have been able to save there beforehand. You found yourself taking a loan. Let me just give you an example of what you can do in your recovery process. Because if you were forced to take that loan out while you were enduring the hardship of COVID-19, you now are in the process of repaying that loan and still investing. And so if that is you, you can look at it again and see, well, how much was I setting aside for retirement anyway? And so you want to go ahead and you want to match what your company is offering you. So if your company is offering you dollar for dollar up to 3 or 6%, you want to maintain your consistency with that, because you're getting money that the company is matching you with, whether it be dollar for dollar or 50 cents on the dollar. But let's just say you were doing 7, 8, or 9%, perhaps even 10%, and you find that it's a little tight for you because you're doing a repayment. If that be the case, then you have the ability, just from a comfortability perspective, bring that 10% down to what the company is matching you and begin to repay what the loan was for your retirement account. If you got a new job in this age, as the companies are coming back into existence, you want to start off by saving in your retirement plan. That will help you to build and have some level of financial stability. So take advantage of the fact that you're going back to work, and in your retirement plan where you're with your company, it is the easiest way to get started on a pathway to financial freedom. And so you're going to see that I will make every effort to leverage that as much as possible. So while we're there, while we're thinking about that, given all that we've endured in the last year, I want you to also, while you're looking at your benefits package and you're saving for retirement, understanding that your company is matching, I want you to take a look at what life insurance is offered and available to you as well. Because it was a scary situation to see our loved ones be here today and gone tomorrow. And many individuals were suffering tremendously as a result of being either unemployed, underemployed, or not taking advantage of the options that their companies offer and or provide to you. Let me also say this: if you were working in the midst of COVID-19 and you found that you have lost a loved one, let me rephrase that. If you were working in COVID-19 and you lost a loved one who was also working, and you are perhaps a direct beneficiary or one in close relationship or contact with that individual, and you know that they were working at the time, I want you to reach out to their HR department to see if they had a life insurance benefit. We leave that money on the table not knowing, and that's oftentimes because we haven't been informed and or advised. So I'm going to take a moment out to really deal with those individuals that may have suffered a loss. Someone that you loved very dearly succumbed to COVID-19. The first thing that you want to know is that recently there was legislation that was passed that if you've had to do an expense out in order to pay for funeral expenses, there's an opportunity for reimbursement in that regard. So I want you to go ahead and check and see, whether or not that's applicable up to you. I believe the maximum amount that one can recover is approximately $7,000 for the loss of a life. So see if that pertains to you. If you had to bury a loved one, and as devastating as it is, we know that the financial impact has been burdensome on many individuals. See if that option is available to you. That's the first thing that you want to do. If the person that you lost, unfortunately, let me be the first to, in this moment and in this space, I offer my deepest condolences. I know that it has been devastating, and we have really been just trying to process. This will be a great opportunity to begin to look and evaluate. On March 31st, it marked the end of a quarter. Every individual, no matter where your financial resources may or may not be, every company is obligated, if you have a financial connection to them, they're obligated to send out a statement or an assessment of whatever it is one may have. And so if you've been trying to figure out what my mother, my dad may have had, what my loved one may have had, and you have not figured everything out, bank statements must be issued, 401k statements, mutual funds that you may not have known anything about, life insurance with cash policies or cash values in it. All of this information must be sent out at least quarterly, 4 times a year. So you should have received information at their address of record, unless they were getting everything electronically. But at least it'll give you some guidance, some direction, something to begin to look forward to and look for. And you're really trying to handle the estate matters of the loved lost one. But do certainly reach out to the individual's company if they were working, and see if they have had a life insurance policy there that you may not have known about. Don't get discouraged if the individuals say that they cannot give you the information. As much as this may pain you, you may not be the primary beneficiary, but there might be something there. And so make certain that you have conversation with the entire family, especially if you did not have a will or anything of that nature. You want to make sure you look for that. It might be the parent, it might be the spouse, it might be a sibling. Just make sure you look very carefully, especially if that person was working at that period of time. That is very critical for you to know that. And so sticking with the benefits that you get on your job, perhaps new job or existing job, make sure that you're looking at that. And then you would have covered 2 areas in terms of comprehensive financial planning: already retirement and then life insurance. The other ones might be a bit challenging to deal with or address after the fact, but it's capable of being done. But before I go into accumulating emergency cash, which might be depleted at this time, if you are a homeowner, and you find yourself in a place where you really want to reassess because of where interest rates have been, this might be a great opportunity to consider refinancing your home. If you're a new homeowner, then you may have already been the benefactor of low interest rates. But if you've been in your home 7, 10, 15, 20, however many years, you may want to consider it. I will caution you in this area simply because if you're closer to paying off your mortgage, as a financial planner, we would really tell you, be very careful about running to refinance a home and then putting yourself further in debt. This is really for individuals that might find themselves having to rebuild over again. You're now working. If there is some equity in your home, it may alleviate some of the pressure that you might have. There are many individuals, and you would not be alone, and there are many individuals that have had to live off of credit card usage. And so if that be the case, and now you find you have these high interest rate credit cards and you have this home that has equity in it, your consideration of home refinancing might make serious sense for you. So take a look at your major asset that you have, see if this makes sense for you. Sit with someone relative to your situation and your circumstances so that you can get a pool of resources to alleviate some of the pressure so that you can begin to rebuild again. It is possible to maintain the major asset that you have and then also still find yourself recovering far more rapidly than you would, because if you can get rid of your credit card debt at an average of 25 to 30%, and pay a lower interest rate or even a home equity line of credit, you want to make sure that you take full advantage of that. You will find that to be very helpful as you are rebuilding. Now we get to talk about the area that we find the challenging and most challenging. See, everything that I've told you beforehand comes right out of your paycheck. That's easy. You set it up, it comes out of your paycheck, and you adjust after the fact, right? So that's usually what we all do. It's like, okay, I'm going to do this, and that's very responsible of you, and you want to commend yourself for being able to do that. But now that you've got to start focusing on that 3 to 6 months worth of emergency cash that financial advisors and planners will tell you, now I'm taking after-tax money out of my bank account, out of my check, and it feels like there's always an emergency. There's always an emergency in my life. And so how am I supposed to save? I want to tell you, remember that elephant, one bite at a time. So I'm going to give you some strategies that may be non-traditional for a CFP. But since we're recovering, I think it'll be perfectly acceptable. And it was our grandparents' methodology, and I think that it worked tremendously well for them, and it will work well for us. I'm going to go and stagger it just so you feel most comfortable, okay? The first thing that I think is the best way for recovery, in someone's life when they are looking to rebuild, is that at the end of the day, if you have a $20 bill, you have a $10 bill, there's no $15 bills, guys. But if you have a $20 bill or a $10 bill or a $5 bill and you break it, make a commitment to do one of two things. All of the singles in my wallet, I'm going to put away, whether it be a jar, a can, or something that you can put something in, but can't take something out. Whether it be the change at the end of the day or dollars at the end of the day, begin to build that up. You'd be amazed. You get excited about seeing dollars in that. I know that that's an old-fashioned way, but when I tell you it works wonders for rebuilding, and you know that you're at least doing the best that you can do in the moment, start there. Because what you have done is you've started a very challenging process. I am a preacher. I'm a very challenging process. And so I want you to begin starting there and give yourself a break. Commend yourself for the work and the actions that you are doing. It oftentimes is difficult to get started. So you start there. Now you feel excited because you have started, and you want to make sure that you know that you can get not only you involved, but other individuals involved as well. And if you stick to that and stay true to yourself, you'll see that it builds up. Perhaps you may want to dig into it once a quarter. Take that down to a bank, right, that you do not have an ATM card or access to. You want to make sure that it's difficult for you to get. This is a discipline thing, but we're now trying to build up our 3 to 6 months worth of emergency cash. and you don't have the ability to do it consistently. So this is your way of getting it done. But you still at some point need to transfer it into an entity that the reason why you want distance from it is because it's amazing how you define emergencies when you have to go from one place to another. And so we want to be practical, we want to be realistic, and I want to make sure that what I'm sharing with you is measurable and possible for you to do. So you want to do this as you're putting, whether you go dollars or coins at the end of every night, at the end of each quarter, you're taking that money and you're putting it in a savings account. So make it like a road trip. Make it an hour away. Make it a bus trip, 2 buses and a train ride. Whatever it is that you need to do in order to make that happen. When you're looking for that account, you're looking for an interest bearing. You want to make sure that you're taking into consideration, things or savings and checking accounts that may have what they call minimum account fees. You don't need anything with a minimum account fee. So do your homework, be very vigilant in searching out something that allows you to put money in, get interest off of, and then you know that you're working on that. As you create stability, financial stability, because that's a just get started method, right? Right? As you create stability, I want you to begin to look at your paycheck. What do you see that's expendable, or left over or reserves if you have it? When I talk about this for a moment, I want to talk very specifically for a minute to those individuals that may be hourly wage workers, right? So if you're an hourly wage worker and you're accustomed to working 25 to 30 hours a week, a way for you to be able to improve or increase that is to ask the question, can I work another 2 to 3 hours a week? Is it available to me? Find out if it's available to you first. And if you're saying this is available to me because I'm on this COVID-19 financial recovery plan, then the 2 to 3 hours that I'm working every week is what I'm dedicating to my savings. I know it's exhausting. I want to get off of this job as quickly as possible. They get on my nerves and I want to leave at the end of the day. But know that you have a goal that you want to achieve at the end of the day. And if it's going to take a sacrifice of 2 to 3 additional hours, you want to put that in so that you can consistently save from each paycheck. So how does this work? It works this way. So you're accustomed to bringing home, I'm giving you a random number so that you can understand it. You're accustomed to bringing home $336, right? You're bringing home $336 every 2 weeks. But now you've added those 2 to 3 hours. And so every 2 weeks, let's make that every 2 weeks, right? So now you are bringing home instead of $336, you're bringing home $361. There's an extra $25 because you've worked 2 additional hours in the week. That $25, you bank that away in your savings account every pay period. So now you have some level of consistency. This is beneficial for hourly wage workers that may not have that 9-to-5 job and your employer is not offering you a 401k. So you've got to be more disciplined in terms of saving and investing and rebuilding that recovery plan. So I'm trying to hit all bases for all people that are here. If you do that, you'll find yourself still accumulating an average of $50 a month. So you're starting somewhere. So you're making the commitment not only to yourself, but a commitment to the recovery overall. And so that's how we began to deal with emergency cash, saving and accumulating that. Now, I think that that's a lot. I think that you would have done a tremendous recovery strategy that as a financial planner, we wouldn't try to tell you to take everything at once. We would tell you to be incremental in your goals and your objectives. But if you're able to do that even for the first year, the next thing that an advisor would tell you is always be focused on systematic investing. Systematic investment allows you to be able to accumulate, to build, to make sure that you're building slowly but surely. Rome was not built in a day. The elephant cannot be eaten all at once. It must be one bite at a time. Systematic investments allows you to accumulate over time. And when we start talking about systematic investing, everything that I've told you to do is systematically, meaning that you're breaking it down to the lowest common denominator, to your pay period, and you'll find yourself able to manage what it is that you're looking to do. You're not going to recover overnight. It took time for COVID to have a negative impact on us. It's going to take time for us to recover out of the most tumultuous season that we have had as a country in a whole. One last thing that I will tell you to do. We find ourselves in a place now in America that is challenging. But there's also still a place of opportunity. And if it's still a place of opportunity, then you have an opportunity for advancement. I'm hopeful that each of you have looked at and really determined something that you would like to do, and that we fully maximize our time being home. Perhaps you took up a skill, perhaps you figured out and identified something that you're really good at. Maybe you took a class. Put yourself out there in the market and see if a job opportunity or advancement is for you. You will not know until you put yourself out there to try to go for it. This is a new season. There are now opportunities open and available to individuals that has never been available before. There are moments in our lives where, you know, you can take one pathway versus another, but because of everything that we've gone through, because of the losses that we've endured, I want to encourage every individual to live life to the fullest responsibly. And a part of that means doing what you love to do. And so I hope that you've created not only a financial strategy, and this has helped you to get on board with a financial strategy, but broaden it to a life strategy. I know that after all of this, I want to do this. This is where I find my joy. This is where I find my peace. And I want to be able to do that as well. And when you are doing that, it helps us to navigate through the most challenging of seasons of our lives. So with April being Financial Planning Awareness Month, you did a wonderful thing by saying, how can I get my finances in order? And so I'm glad that you were here today to join Christina, Mark, and myself and Cash Campaign of Maryland. But now begin to think bigger. Do not negate the opportunity that you have to dream big dreams. Thank you so much for your time. I am willing to answer any questions that you might have. At this time, I turn it back over to you, Mark.
Thank you so much, Dr. Nicole. We're going to open up the questions in the chat box. If anyone has a question or a comment they'd like to share, feel free to do that in the chat box. We're going to allow a couple minutes for you to either unmute yourself or for you to ask any questions that you might have.
I wanted to make a comment, Dr. Simpson, when you were talking earlier about getting in touch with the HR companies. That's such a brilliant idea and way to go. I had a friend whose mother passed away a couple months ago, and they were trying to figure out how they were going to pay for all of this. And a random relative mentioned that, but they had no idea that that was even an option. So I think that's a really, really good point to make, because often people think if I don't see the paperwork in front of me, it doesn't exist. Yeah. So I thought that was really useful.
Thank you very much. And I don't think that we've dealt with death on this escalated level as a country beforehand. Yeah. So we oftentimes are not thinking about the right things to do, but many people will find that some pressure is alleviated just when someone was employed. So, you know, so for those of you that are on, if you hadn't thought about that, if it impacts you, I hope that that was very helpful for you as well.
Then we have a question in the chat box regarding her goals. Her first goal is retirement planning. How do you get started understanding how to assess how much you will need to retire comfortably?
Well, I think the first thing that you need to do is look at your lifestyle. What is it that you're looking to achieve. And so retirement planning, I hate to give a measurement of X percentage of what you're earning today, because there are people that are extraordinarily responsible. There are people that retire with significant debt still outstanding. The first thing that you really want to do is assess, what are my goals in retirement? How do I want to live? What debt do I plan on eliminating? What guaranteed income will I have at that period of time, whether it would be Social Security that you know that you'll have, whether it would be, you know, that you work for a company that offers a pension. Those are not really as readily available today as they have been historically. So you want to assess all of that, see what that minimum threshold number is, and that will give you a base of how much I need to save in order to allow me to retire comfortably. The other thing that you have to take into consideration is, how old are you? Because your age does matter. If you're younger, you can save, you'll have the interest, you'll have the power of compounding interest and investment interest over the years that will help subsidize, you know, how much you need to save. If you're a little older, you have to save a bit more in order to achieve that particular goal. You may have a desire of retiring, you know, although I will say long gone are the days where people retire at the age of 60, 65, because we're living much longer now. So you want to take into consideration that, you know, if I retire, my goal is to retire at normal retirement age for my Social Security, whatever that may be. So that might be anywhere in the mid 67, 68, you know, whatever year that might be for you, that's your goal for retirement. Then you've got to think, how many years will I live in retirement, and what does that lifestyle want to be? And so if we look at life expectancy and just at a minimum add 20 years, can your money sustain you for 20 years in retirement? You don't need the entire pool the day of retirement, but these are the things that you have to consider in terms of comprehensive planning overall. But it really does matter who it is that you are, how old you are, how much risk you're willing to take, what obligations, the financial obligations that you will have. I find that if you're working for a major company, they now have all of these amazing retirement tools that will give you a broad assessment of, if you save 7% and you know, or if you save 6% of your income and you earn 10%, when you retire at 61 or 65 or 67, you will have X amount of dollars. So that's a good starting point that doesn't take all of what I said into consideration, but at least it points you in the right direction. And if you're being responsible now, then you're eventually going to want to hone in on that number more succinctly so that you can be more targeted in your retirement savings.
Perfect. I think a follow-up question also was any recommendations for resources to get started on a smart household budget?
Cash Campaign of Maryland.
Great answer.
It's a perfect place to get started. They are a resource center for you, and then they have dedicated individuals such as myself to be able to sit. And I'm sure Mark in the very end, again, is going to talk about the difference between a cash coach and a financial planner. So I would start right where you are right now and make sure that you set up an appointment with Mark and Christina, and they certainly will guide you and direct you to the people that you need to have a conversation with. I saw a question pop up. I don't know.
There's also another question about special needs trust. I'll go ahead and address this. If you're looking to set up a trust, I would defer to the Maryland Volunteer Lawyer Services. It's a great organization. If you have any questions specific to setting up like an estate plan or special needs trust, fill out the form. Christina put in the in the chat box a form that you can fill out that helps us to follow up with you if you have any specific questions following this workshop. This will get you connected with our financial planning program and special services such as a special needs trust. For the interest of time, I'm going to go ahead and close off the webinar by giving you a little bit of information on how to enroll into either our financial coaching or financial planning program. I want to thank Dr. Nicole and Christina for joining us today. But as we close off the webinar, I do want to share a few resources with you that you can get plugged into today. The first is financial coaching. Many folks, the term is relatively vague, but financial coaching is a relationship based on the premise that people have the answers. The coach is not the expert. The client is. The financial coach will help facilitate, but the coaching relationship is based off the foundation that the client is as creative, resourceful, and whole as the financial coach or financial expert is. There are two tiers that you can think about if you are trying to figure out which program is right for you. The first is financial coaching. If your financial goal is related to developing a budget, developing a spending plan, maybe improving or building your credit, paying down your debt, or achieving a short-term savings goal, for example, an emergency savings if anything were to happen unexpectedly, or even just purchasing a car, you'll want to get started with a financial coach. So in order to sign up and participate with that, there is a text code that you can text to a specific number to get a link to set up an appointment with a financial coach. If you want to set up an appointment with a one-on-one appointment with a first certified financial planner, you will complete an intake survey. So in the chat box, you may have noticed a link that was dropped by Christina. If your financial goal is related to investing, to insurance, to maybe even starting a small business, essentially anything that helps you to achieve a long-term savings goal like retirement planning or college savings and home ownership, you'll want to get started specifically with a certified financial planner. So how does financial coaching help? We partner with an organization called Trust Plus, and essentially you will be able to set up a ongoing financial coaching relationship with a Trust Plus financial coach. You can address issues such as money management and budgeting, credit and debt management, looking at options with banking institutions and financial products and programs, and establishing a savings program. So all these services and tools are available. It's 100% free, 100% fact-based. There's no product selling because both the Cash Campaign of Maryland and Trust Plus are both nonprofit organizations. There are a couple of success stories that I wanted to share about getting plugged in with financial coaching. On the left, you'll see Greg with his financial coach, Tom. When Greg first started off, he had two major goals. Number one, to get a promotion at work, and number two, to finish off his GED. Through working with his financial coach, Tom was able to not only get a promotion from work, but he was also able to set aside a down payment for his first car. On the right, you'll see Monica with her oldest daughter. A major goal of hers was to purchase her first car. But in addition, she also started working towards purchasing her first home. And all of this was started by attending a financial education workshop like you're attending now, and working with her financial coach and eventually her financial planner. So a couple of roles and responsibilities with regards to the coaching and client relationship. With a financial coach, you're gonna be able to meet regularly with the financial coach. They're gonna help you to set up goals and provide accountability and checking in with you as a client. They're gonna maintain supportive and non-judgmental relationships and record goals and notes. As the client, you're gonna meet regularly with the coach and you're gonna make a commitment to set financial goals and make a good faith effort to completing any promised tasks that are developed between you and your financial coach. And it's really important to be open to any constructive feedback, but mostly just communicate any outcomes honestly with the coach. I myself have actually gone through financial coaching as even a staff member with the Cash Campaign of Maryland, and my financial coach was Tiffany, and she really helped me organize and think outside of the box, different tools for reducing debt and addressing student loan issues that I was able to just address and talk out loud with another person. A lot of times, the most valuable thing that you can get with a financial coach is just being able to have conversations out loud with another person, someone that's not going to judge you, someone that you feel safe to address a feeling or a concern with, and can give you practical advice on how to move forward. They're there in your corner to coach you, but they're also there to encourage you and spur you on. So those are some of the benefits of getting plugged in with a financial coach. Like I said, we partner with Trust Plus in order to offer financial coaching. But essentially, you'll meet with your coach over the phone or over Zoom, wherever you are. But they're typically 30-minute sessions every other week that you can set. And if you can't make every other week, then you would just schedule the appointment through Trust Plus when you are available. So in order to enroll in financial coaching, you're going to text a code to this phone number. It's 646-349-5959. And if you notice, there's a text code, and that text code is CASH-MD. It's all caps and no spaces. So what's going to happen is you're going to get a link to the app. And once you download the app, you'll be able to set an appointment. If you notice on the sidebar, there's a icon for an appointment. You can also go to the website specifically to set up an appointment with a financial coach. And while we know that financial coaching and financial planning can be really scary, we like to address what some frequently asked questions are. For example, how is the service free? Like I said before, both the Cash Campaign of Maryland and Neighborhood Trust are 501c3 nonprofits that raise grant dollars to provide these types of services to low to moderate income families. Your information is completely kept safe, and not only is your information 100% confidential, but you have 24/7 lifetime access to the help that you need at no cost to you. As I'm talking about financial coaching, I also want to show you how to get involved with financial planning. So if you want to do a one-on-one session with Dr. Nicole Simpson, essentially you can go to our website under what we offer. If you go to the financial coaching and financial planning tab, you'll see, I'm going to share my screen. Under the financial coaching and financial planning tab at cashmd.org, you'll see a link on the bottom right for you to complete an intake form. And this intake form is going to give us an idea of what financial goal, question, or situation that you're seeking financial planning services for. And it can be as broad as setting up, a midterm to long-term financial goal for retirement, to setting up an estate, to setting up a college savings goal, or even investing. So you're asked a few simple questions for us to get an idea of what your availability is. And essentially what this does is it gives us a snapshot into your current financial situation, so that the financial planner can be as prepared as possible for your one-on-one session. Typically, the financial planner will meet either 1 or 2 sessions with you, no longer than 30 minutes, sometimes up to an hour, based off of the financial planner's availability. But if you have any questions regarding getting plugged in with a financial planner, feel free to email me at, email Christina at cashmd.org with any specific questions. But from our website, you can go and you can find the intake form to get plugged in with a certified financial planner. My best suggestion would be to set up a one-on-one meeting with a financial planner first, develop a plan, and then set up a meeting with a financial coach to work the plan throughout the year. Many times a certified financial planner will do an annual review with you to see and check in with you to see how things are coming along. And so that's up to the discretion of the financial planner, but also up to the discretion of you as the client. That if you have any further questions, feel free to chat it into the chat box right before we close out the webinar today. All right, perfect. If you, thank you so much for attending tonight's webinar. If you have any further questions, you can visit our website, and you can also reach out to either Christina or Dr. Nicole with any specific questions. Without further ado, I'll go ahead and close out our webinar. This webinar was recorded or was streamed live on Facebook. So if you maybe came in to the webinar late, you can view the webinar live on our Facebook page. Just follow the Cash Campaign of Maryland on Facebook, and you can feel free to share on your social media platforms if you have anyone that you think might benefit from the information that was shared today by Dr. Nicole. Without further ado, I'll go ahead and release you guys to your evening. Thank you again.